If you've made money from freelancing, YouTube, selling online, or any side hustle, you could already owe HMRC money, even if you made as little as £1,001. And yes, the fine for missing the deadline is automatic £100. So let's make sure this doesn't happen. In this video, I'll show you exactly who needs to file a tax return, what you must have ready, the biggest mistake most people make, and how to avoid paying more tax than you should. Hi, I'm Amma, a chartered accountant and a tax professional from AB & Co Accounting and Tax Services. This video is for education only and not a tax advice. For a tailored advice, please speak to your own accountant or contact us. Let's start with the biggest mistake I see. Most people assume that they don't need to file a tax return, but they actually do. Let's see if you are one of them. Have you made over £1,000 from any side hustle, freelancer, consultant, from selling on eBay, Amazon, Etsy? If you have made over £1,000 from these side hustles, HMRC wants you to register for self-assessment and file a tax return by the deadline. And yes, even if that is the only income that you have received in the tax year and the total gross income is under the personal allowance, you still need to file a tax return, register file to HMRC. Have you earned over $2,500 gross income from other untaxed sources such as tips, commission, cash at work? HMRC wants that too. You must register and file your tax return to HMRC. Do you rent out a property? And if you do, have you received more than $2,500 gross rental income from that per tax year? If you have, and you don't live in the property with the tenants, HMRC wants you to register for self-assessment and declare it to HMRC. Remember, this is different from rent a room relief, where the landlord lives with the tenant and the property is a furnished accommodation. Register immediately and file your tax return to HMRC. If you have received over £1,000 up to £2,500 gross rental income per the tax year, all you need to do is to contact HMRC and let them know. You don't need to register for self-assessment in that case. Have you received over £10,000 per tax year from dividends, from interest outside ISA account? HMRC wants you to register for a self-assessment tax return. If the total you have received from dividend, from interest outside an ISA account is less than £10,000 per tax year, all you need to do is to contact HMRC and let them know. They will do a simple assessment and let you know how much you owe. In that situation, you don't need to register for a self-assessment tax return. Are you living in the UK as a UK resident? And have you received any foreign income whilst you are a UK resident? If you fall under this and you haven't reported it to HMRC, they will be coming for your money. You must register for tax return and submit all your foreign income or gain to HMRC, because if you are a UK resident, you pay tax in the UK on your worldwide income and gain. Most people believe they can hide their foreign income from HMRC. Remember, the HMRC Connect software is doing its work and it will catch you one of these days. Report all foreign income immediately to save yourself a penalty. Have you sold shares, crypto, or a property? You have to report them to HMRC. Unless the property you have sold is your main residence where you have lived throughout the ownership period, you have to report it to HMRC. Again, if the shares that you have sold was within an ISA, then you don't need to report it to HMRC. If the gain from the sale of shares within the ISA is exempt, so you don't need to report it to HMRC. If you fall under this, you need to act quickly, because in the UK, if you sell a residential property, you must report it within 60 days to HMRC from completion date and pay your liability within the same 60 days. Have you received any child benefit and is your adjusted net income over the threshold? If it does, you will pay high income child benefit tax charge, and this is paid through a self-assessment tax return. If you fall under this, you must report this to HMRC as soon as possible before your penalty arrives. If any of these sounds like you, keep watching, because next I'll show you what HMRC expects from you and what you must file. If you have found any value so far, please send us a signal by hitting the like button and subscribe to our channel to help us reach more people and to help us grow. What do you need to know before you even file your tax return to HMRC if you fall under any of the ones I've discussed? The first thing is what is called a unique tax reference number, UTR for short. This is your tax ID. It identifies you to HMRC. Anytime you do any filing, HMRC will know that is you. Anytime you make payment, HMRC will know the payment is coming from you. So the unique tax reference number is a very important number that you must keep secured. Before you get a unique tax reference number, you must register for self-assessment. Once you register, HMRC will send you a UTR number within 14 working days. That is the first thing you need to have in place before you can even submit your tax return. The next thing you need to be aware of are the deadlines. In the UK, the tax year runs from 6th of April to 5th of April the following year. You must file your tax return after the end of the tax year. If you're using a paper return, you can file your tax return anytime from 6th of April after the tax year to 31st of October after the tax year. If you're doing it online, then you have from 6th of April after the end of this tax year to the following 31st of January. These are very important days. You must write them down, because if you miss them, you will get a penalty automatically. The 31st of January is the final deadline for your online tax return submission and for payment of your tax liability. Again, you may have heard what a personal allowance is. This is a tax-free amount that is given to everyone living in the UK, and this amount is an amount you can receive in the UK without tax. Currently, this amount is 12,570. The next thing you need to be aware of is what is called a payment on account. This is an advance payment towards your next tax bill. So HMRC takes this amount, places it somewhere for you, and when your next tax bill comes, this amount reduces your tax liability. You will pay this amount unless your tax liability is up to £1,000, or unless you have paid over 80% of your tax liability through payee or through your tax code. HMRC calculates the payment on account based on your current tax liability. So assuming your current tax liability is £1,000, the payment on account is divided into two. 500 will be due on the 31st of January in addition to your tax liability, and the remaining 500 will be due on 31st of July. What records must you have in place to ensure you don't delay and you don't even get a penalty? Here is the part that is extremely important, because here is where, if you don't keep the right records, you will either increase your tax liability because your profit will be too high, or you pay less tax. And so the first record you need to keep is you need to keep track of all your income from all sources, because if you miss an income and HMRC's Connect software has gathered a different amount of income from what you have reported to HMRC, a compliance check will be raised and you will find yourself in trouble. Again, you need to track all expenses And I mean all business allowable expenses. You need to have a procedure or controls in place that tracks all your expenses. And to do this, you must make sure you have a dedicated business bank account that only caters for your business transactions and never have any of your personal transactions in there. This helps you to track all your expenses as long as you're using the business card for business allowable expenses. You won't miss any of them. But if you miss personal transactions within business transactions, it becomes difficult to track your business transactions, and you may confuse personal transactions with business transactions and claim what you are not supposed to claim. And so there are several softwares that can help you do this. Xero, QuickBooks, Sage, and many more. Free Agent and many more softwares that you can use to track all these. You can also hire either an accountant or a bookkeeper to track these for you, to give you a chance to manage your business. This is where a professional comes in. You may contact us to handle all these for you, or you can speak to an accountant to do this for you. After you have tracked everything, you have completed your tax return, it's time for you to submit it to HMRC. Currently, you can either use tax software to do this, or you can use HMRC's online services to submit your tax return, HMRC. If you want to use HMRC's online services, you need to have what is called a personal tax account. And you will have a personal tax account immediately you register a UTR number. So you need to note your login details down carefully, because that is what you will use for everything about your taxes. Your personal tax account is where you can find tax return to submit, where you can find your liabilities that are due to HMRC. That is where you can find if you are due any tax refunds. It's a place that you manage everything about your taxes in the UK. So the personal tax account is an important account that you need to keep the login details safe. The last thing to note is, if you can't pay your tax bill, you can have a payment plan arrangement with HMRC as long as your tax bill is below 30,000. You can have a payment plan in place. All you need to do is to contact HMRC. They will do an assessment with you and will let you know how much they want you to contribute every month. The biggest mistake that everyone should avoid is to wait until the deadline to try to gather everything, because that will create error. That will make you miss important expenses to claim. That will make you miss some income that you need to report. That will make you panic, and that will even delay submissions. Everything about waiting till the deadline is dangerous. So don't wait until the deadline to prepare and submit your tax return. If you haven't submitted your self-assessment yet, today is the day. Check if you need to file your tax return, prepare and submit it on time to avoid the automatic £100 fine. If this video has helped you, please hit the like button and don't forget to subscribe to our channel. If you need an accountant to handle your tax return and self-assessment and everything about your business for you, please do contact us. Drop a comment below if you have any tax question. I'll pick up the most asked ones for future videos. Thank you for watching.